Hey, Bulls and Bears. It is Sunday, February 13th, 2022. Welcome back. Took a day off yesterday. Kind of have a lot going on as far as family stuff right now. So today in this report, we're going to try to pack a little bit more news than usual, a lot more than usual, into this report, but we're going to try to keep it consolidated and precise and quick and try to get it in as under 10 minutes is my usual goal. And we've got a lot to talk about. We're going to talk about the uptick in crime, the economic destruction that's impacting households, the levels of debt. The uptick in crime also includes some very unusual arrests and some unusual people that you wouldn't expect getting in trouble, getting arrested. We're also going to talk about housing and real estate. The housing bubble is what many are calling it, and what Zillow is predicting for the next year in prices. Also, what's happening with interest rates, and is the Fed going to follow through? Are they following through on what they're saying and what they've been saying they're going to do? We're going to talk about all that and more. Let's get started right here. Recent article here out of Axios, but this is not the only article. We've been talking about this for a long time as the economy continues to deteriorate, as debt levels increase, as poverty increases. We're going to see an uptick in crime, and that's been happening, so we've been 100% correct on that. But take a look at some of the reports from this article. Quote, we've experienced a 300% increase in retail theft from our stores since this pandemic began. That's a CVS, that's CVS Pharmacy, a spokeswoman, 300% increase, folks. That's a tripling of thefts. And I'm thinking we're seeing that in a lot of different areas. On this channel, we talked about the trains that are being looted in the Los Angeles area. Here's another one. A Rite Aid just closed its doors in Midtown Manhattan. More than $200,000 in goods were stolen in December and January. And that was also reported out of the Post. And it should be no secret as we look back through history, as we look around the world and see other countries, the countries in most financial peril, the countries with the most poverty, a lot of them are also some of the most dangerous countries as far as crime. And we're also seeing upticks in other types of crime as well, not just thefts, unfortunately. Speaking of rising crime and more types of people committing these crimes, as the cost of living continues to skyrocket, an 80-year-old nun sentenced to 1 year in prison. Now, that's a very light sentence. Take a look and see what this nun did. A nun who's a principal of a Catholic elementary school in California has been sentenced after she stole hundreds of thousands of dollars from the school for her personal expenses and to bankroll her gambling habit. We just talked about gambling a few reports ago. 80-year-old nun here was sentenced to a year and a day in federal prison and ordered to pay $825,000 in restitutions. It continues here. Despite her nun's vow of poverty, the principal of 28 years admitted to stealing over $800,000 from this Catholic school in Torrance, California, over a period of 10 years. All right, so obviously this happened over the course of many years. So it's not just the recent uptick in the cost of living that pushed her to do this. But the point is, I want to make a much broader point on this. People that are looked at as trusted people, you really need to question them. You really need to question them. When people are put out there as the almighty or the be-all, end-all, that's when you need to question them even more. I mean, look at some of these preachers on TV. A lot of them are mega millionaires. We're talking 100 million and beyond, in some cases billions. But they're out there pretending, that they want to help people. Now take that and expand it across everything that you see and hear, and try to connect the dots accordingly. Right, next over to real estate and Zillow, what they're forecasting. Zillow is out there saying 2022 home prices are going to spike another 16%. Another 16%. So obviously Zillow doesn't think that the Fed is going to follow through on what they're saying. And just to be clear for those that don't know, the Fed is talking about eliminating all asset purchases. That means no more mortgage-backed securities. By the end of March, they're supposed to be done purchasing those. The purchasing of these securities and assets and monetizing this debt is one of the ways that incentivizes or allows banks and mortgage companies to keep giving out bigger and bigger mortgages. Now, this by itself may not be enough to slow down the housing market because you have institutional money, investor money, including multinational companies coming in and buying tens of thousands of homes. In some cities, it's as much as 1 in 3, and in some cases, even 50% of all homes being bought by investors and institutional money. But one thing to keep in mind about Zillow's forecast, remember Zillow lost big on their home flipping business. So are they putting this out there to try to help themselves get rid of a lot of the inventory of these homes that they bought that they're now unloading or attempting to unload? So a company with a vested interest in selling homes and flipping homes in this case, are they going to say that prices are going to go down even if they thought they were? Or are they going to keep this positive image up in the housing market and actually rising prices? Some people may not look at that as something positive, but as a company with this type of interest in real estate and selling homes, flipping homes, are they going to come out and say prices are not going to rise? Well, that's very unlikely. That would be like shooting themselves in the foot. So please let me know what you think down in the comments about what Zillow is saying. Are they right? And two, do they actually believe what they're saying, or are they just saying that for their own interest? Speaking of big mortgages, U.S. households took on $1 trillion in debt in 2021. Now, that's all types of debt, including automobiles, which we're also seeing skyrocketing prices. And that was the largest increase since 2007. As we scan across the news, we're seeing more and more situations come up where things are as high as or exceeding what we saw prior to the previous financial crisis. But yet so many people are out there saying that there's no problem, the economy's strong, there's nothing to be worried about. Don't worry, you're being doom and gloom if you are concerned about these things. They say, don't worry, our quote unquote leaders, they have everything under control, they've got our backs. They are the experts. Just sit back, relax, and let the experts handle everything for us. In the meantime, take on unlimited amounts of debt. It's okay because there's always going to be a rescue program at the end of the day. Let's talk about mortgage rates. Mortgage rates continue to trend higher. And let's go into a 5-year chart here. And we look to the far right. And we do see a pretty big spike in mortgage rates. Now keep in mind, they attempted to raise rates back in 2018, 19. Well, they didn't attempt. They did raise rates. But the markets did not like it. We saw the big drop in the stock market. The slowdown in real estate, which is very temporary slowdown, and then a further slowdown into 2020 with the sickness. But after that, all the chaos that happened, the shortages, the shutdowns, the rescue programs, the increase in the money supply, a drastic increase. Over 1/3 of all dollars in existence were created just since the health crisis rolled out at the beginning of 2020. Let's talk about car prices. I think everybody knows that car prices have been skyrocketing. We're at all-time highs, and the prices do not seem to be slowing down. They continue to increase. Recent article here out of the Post: demand for cars more than a year into the pandemic emboldened dealers to inflate prices. Of course, when a seller of an item or product knows that the merchandise is in short supply, they're going to raise prices. That's just simple business. Some people say it's not fair, that they shouldn't do that. Other people say that's business. When something is in high demand, you raise prices. That's how you make money. And that's what businesses are supposed to do, is what people will say. But take a look at this chart right here. You see, going back a couple years now, the number of cars sold previously before the health crisis came out and all this economic chaos, we saw that less than 5% of vehicles sold were sold over MSRP. That's manufacturer's suggested retail price. Since then, 82% have sold over MSRP and only 17% under MSRP. And if we look at the gold kind of yellow looking line right here on this chart, does it seem to be slowing down? Well, it did slow down a little bit last fall, but we're continuing to accelerate higher is what it looks like on this chart. So things are continuing to get worse. Prices continuing to rise, maybe at a bit of a slower pace. But the people that are buried in record levels of debt right now, they don't need prices to rise at a slower pace. They need prices to drop. Will that happen? Please let me know down in the comments. Is Zillow correct? Is the housing market and home prices, are they still going to see another 16% in year-over-year price growth? Or is Zillow being overly optimistic for their own reasons? And what do you think about the uptick in crime? The 80-year-old nun only getting a year in prison and having to pay back the money that she basically stole over many years. Please let me know down in the comments. Hopefully you're enjoying your day, whether you're watching the game or not. I hope everyone's well. Thanks for watching. Thanks for being here. Be safe. Bye for now. Peace.